Good morning. Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Excuse me for my voice, slightly under the weather, but and the markets are under the weather as well. So, well, a good day to choose that. U.S. markets, of course, fell in yesterday's session, and by the way, the culprit was not only the Nasdaq. I know that's the favorite whipping boy, but I think the others have fallen suit as well. The SPX or the S&P 500, in fact, had its worst month since March 2020, and if we look at this, the economically sensitive companies, the industrials and financials, were the worst performers here. And this happened despite the House passing the 9-week spending bill to avert the US government shutdown. So that was a big looming thing. Oh, what will happen? In order to avert that, some good news came in as well. But I think the markets just took it on the chin. Now the futures, as I read across global websites, are marginally in the green, but that is not doing much to salvage any kind of action in the Asian screen. HSI and China are shut, of course. Hang Seng is shut, China is shut. But if you look at Nikkei, ASX, Kospi, all of which have a tick of red to themselves. The SGX Nifty, the last time that I saw, was trading about 1% or slightly less than 1% in the red. Let's wait and watch if there is more in store. Do we start off as weak as some of the other Asian counterparts are, or do we start off about 170 points lower? I think the day will tell. Now, keep in mind, viewers, that we started seeing some bit of this in trade over the last few days because the market breadth was iffy, up one day, down the next. Day before yesterday, we had a fairly positive market breadth. In yesterday's session, too, 261 advancing to 237 declining. But the large caps suffered a bit of, how do I say, a corrective move. And FIs were net sellers to the tune of over 2,000 crores with hardly any buying that came in from DI. So that's the point. That is part one. And part two, we are ending the week in a very action-packed fashion because it is the start of October and there's a bunch of things slated to happen in the month of October for the Indian markets, arguably for the global markets, but for the Indian markets as well, because we'll start off today with the auto sales numbers. And from whatever little we've figured out thus far, for passenger vehicles and two-wheelers, the numbers will not necessarily be good. So we already had some bit of bad news when it comes to the auto names in form of Maruti, and I'll get to that. But just what to watch out for in October is auto sales, steel price hikes if they happen, the MPC meeting, and that is something that everybody would be watching out for, Q2 results season, and maybe IT starts off well, but what about some of the others? Well, I think let's wait and watch. Maybe some of it is built in the expectations. IPO was worth nearly 45,000 crores. I mean, these numbers could be anywhere between 35 and 45,000 crores, but broadly, fair degree of primary paper hitting the markets as well. And could that also pose a bit of an issue for markets? I think time will tell. But I think in today's session, all eyes out for gas companies, auto companies, and maybe steel companies if indeed there are some price hikes announced. Let's wait and watch. And of course, new F&O entrants. Remember, I had mentioned this yesterday, that there are these 8 companies that are coming out in the F&O space starting today. And just to recap, Abbott, Crompton, Delta Corp amongst the more interesting and more actively traded names, as also Oberoi Realty and Persistent, not necessarily the most well traded, but in the sectors which are doing really well for themselves. And therefore, I'll watch out for both of these as well. But all of these 8 names should be monitored very, very closely. What about the other stocks that are in focus today? I think that's the key thing. So TCS, there is a board meet on October 8th for the results as well as the second interim dividend. Now, a lot of doubts were there about whether TCS will announce any corporate action in any fashion whatsoever, including a dividend or a buyback or what have you. I think what we're getting right now is that there's a second interim dividend on October 8th as well as results. So watch out. It kind of kickstarts the earnings season in a meaningful way, does TCS. And if there the commentary is good, as was the case with Accenture, then maybe IT doesn't have too much of a downside. Remember, the stocks have corrected a little bit over the last few days before bouncing back yesterday. JP Morgan was extremely buoyant on IT names and has upgraded the targets, etc. And the business seems to be doing very okay. The conferences of various brokers, including, I mean, I remember reading Tata Alexei's commentary from Motilal Oswal conference, if I'm not wrong, extremely gung-ho about what's happening in the near to the medium term. The interviews that we've done with the IT companies, they're not sounding panicked at all about wage pressures. So let's wait and watch what happens with the big boy, and it'll be very interesting to see. Yeah. The last 1 month, as you can see, except for a couple of names, IT's kind of stood tall. So pretty interesting moves there. What else? I think bad news come in the form of Maruti. They have said that they expect adverse impact on vehicle production in Haryana and Gujarat plant in October due to chip shortage. So it is not going away, the chip shortage. They are saying that the total production volume across both the locations to be around 60% of normal productions. This is from the exchange, of course. But this tells you a story or two, right? Come September, everybody was talking about how the chip shortage is a thing of the past. But we had the Volvo Eicher MD say that people are hallucinating if they believe that the chip shortage issue has gone past. And he believed that it will impact production in the October, November, December quarter too. Now we've had the largest passenger vehicle brand come out and say that there is an issue out there. Let's wait and watch. Now, demand is one thing. The point is, even if there is demand, companies may not be able to supply the cars that they want. So it's a bit of a pickle. Let's wait and watch. A festive season hitting. This is the peak time. It's unfortunate that there's a chip shortage here. Then Oil India and ONGC, as well as the gas companies. The domestic gas price in India has been revised by to about $2.9 per MMBTU, up 62 odd percent. So Oil India and ONGC will be in focus, as would be IGL, MGL, and Gujarat Gas. So these three also would be in focus because of this uptick in the domestic gas price. The difficult gas field pricing has been set at $6 for $6.13 for the October to the March period, and almost everybody believes that the price hikes would be even more stronger in the revision that is slated to happen in April. So I would urge everybody to do the math, but here's one simple thing. The crude prices had anyways inched up, and therefore the average realization of crude for FY22 or FY21 for the oil and gas companies, the upstream companies, is anyways higher. Now, if you have the gas realizations also higher for the entire second half, and arguably for the first half FY23 as well, then you know that there's going to be an earnings beat out there. Or rather, a good earnings performance. Whatever is priced in, I don't know, but a good earnings performance out there. That's what you want to figure out. Now, it'll also be interesting to see what do the city gas distributors do, whether they pass on the price hikes and to what quantum. They will pass on some of the price hikes, but to what quantum they do that to maintain their margins is the interesting bit out here. I would watch out though for Gujarat Gas. It doesn't get as impacted as MGL and IGL. So therefore, do watch out for these names. Then you have to watch out for real estate names. There's just more and more good news that keeps on coming. Now, for the Mumbai-based real estate companies, the Union Minister of Environment, Forest and Climate Change has approved the much-awaited coastal zone management plan for Mumbai and Mumbai suburbs in Maharashtra, and which is great for a lot of builders who might have some exposure to these lands or done some deals with the people who reside here, what have you. And for the large developers who the government, the bodies, as well as all stakeholders would have comfort with. So I think it's great news for a bunch of these Mumbai-based developers. This may spoil the skyline, if you will, as Meenka was telling me yesterday on messaging, but it will open up vast tracts of land for development. Also, residential registrations in Mumbai were the best in 10 years in the month of September, up about 35% YOY. Do watch out for Godrej, Oberoi, India Bulls, like 2 or 3 names that really stand out, as also smaller ones like Ajmera, etc. So all of these Mumbai-based are in focus, and Delhi-based companies are in focus today because I think the Delhi government has extended the cut in the circle rate by 20% till December 2021. This is a big boost for every Delhi-based company. So I know DLF larger proportion in Gurgaon, but I think exposure in Delhi also there. Some of the others might have there. Some of the likes of Godrej Properties, etc., have taken exposure to Noida. Maybe they have some exposure to Delhi, I don't know, but this would be positive for DLF for sure, and maybe some of the others. So do watch out. Some other stocks in news include an IFL Wealth Management, wherein they've said that the IFL Asset Management, which is the subsidiary of IFL Wealth, has crossed AUM of 50,000 crores. It was 37,000 crores on March 31st. So they've really bumped up their asset base in the last 6 months, and this should augur well for IFL Wealth, the stock. And Philips Carbon Black, the company's launched its QIP issue and approved the floor price of 255, which is about a 4.5% discount. to yesterday's closing price. So that's one more stock that you got to monitor. All in all, viewers, oil and gas, and remember, upstream companies have already had a bit of a rally, but maybe there is more in store. But the city gas distributors would be the key ones to watch out for. I would watch out for real estate names today, despite the fact that the markets are going to start off lower. And I would also watch out for the auto names as the releases come. Keep in mind, the CV companies would be the principal ones to watch whether they can meet the heightened estimates that people have put out for what they will do in the month of September. So keep all of these at the back of your mind. Thanks so much for tuning in today. Have a safe day. Have a great weekend ahead.